During this entire rally, I've watched as one analyst after another has tried to pick the top. I warned repeatedly that it's just uh, it's not safe to definitely not to try and pick a top and trying to short a first daily cycle out of an intermediate and yearly cycle low, and I think this is an even larger degree 4-year cycle low is uh, is extremely dangerous. But it happens during every intermediate decline. Traders become conditioned uh, to only expect lower prices during the declining phase of the cycle, and then when the bottom comes, they continuously try to pick tops and short, and if they made any money during the decline, they end up losing it because they weren't able to flip the switch and convert to bullish strategies once the bottom comes. Um, so, warnings aside, we're due sometime here to get a move down into at least a minor daily cycle low. The intermediate cycle isn't due to top, but this daily cycle is getting pretty mature. Now, it's not at all unusual for a first daily cycle to recover all of the losses from an intermediate decline. And you can see the Dow is already getting pretty close to doing that. We're only about 1,000 points away. And I think this 26,000 level is going to be important. So you can see during this rally, I've marked each psychological 1,000-point level. We tested the first 23,000 like in the first day, went through it, briefly dipped back below it during the Apple pre-announcement, and then it's been off to the races ever since. A brief 4-day sideways consolidation at 24,000 and breakout, a 2-day consolidation at 25, breakout, and then retest. And now we are testing 26,000 as I speak. And as of this morning, anyway, the futures are pretty strong. So it's all going to depend, I think, on whether or not we go through this 1,000-point level easily, like we did these last three. If we do, then this first daily cycle is probably going to test the all-time highs before topping and then moving down into a daily cycle low. It's going to take a couple days here before we know whether or not this 26,000 level is going to get breached quickly, like these other two levels or three levels, or whether this might prove to be enough resistance that we get a pullback, something that would be recognizable as a daily cycle low. But let me warn again, the bears are chomping at the bit to find a top because they think that this market is going to roll over, come back down and test or start making lower lows. Way too many people think we started a bear market here, and we did not start a bear market here. We are not in the same environment that we were from 2000 to 2009. We were in a secular bear market during that period. We are not in that kind of environment anymore. That 9 years is about the normal duration for a secular bear market. They usually last about a third as long as the preceding bull market. Bull market lasted from 1980 to 2000, so or one could even make the case that it may have lasted from 74 to 2000. So between 20 and 26 years. So nine years is right about the normal duration for a secular bear market following a long-term bull. So we are not in that bear market scenario anymore. We are now in a long-term bull market. We've only gone 10 years in this bull market. So we should have at least another 10, maybe 10 to 15 years yet to go before this bull market is over. So whenever we do get a corrective move, whether it starts at 26,000 here and we pull back, or whether we break through this and test the all-time highs first and then pull back, you want to buy that dip. You don't want to listen to the perma bears tell you how the market is rolling over and we're going to start the next leg down in this bear market. This is not what is happening. Markets have corrections on the way up, even though this one really hasn't had much of any correction. But it will at some point. We're going to have a correction, something that will push the RSI. And let me put that RSI in the chart. All right. So something that will take the RSI down to oversold levels. But during the advancing phase of an intermediate cycle, price doesn't stay oversold very long before it starts to rally again. So you can see that here. This is the advancing phase of an intermediate cycle. And you can see price just tends to bounce off of oversold very quickly, and then the next rally starts. This pullback didn't even manage to push the RSI down to oversold. Then when you get in the declining phase of an intermediate cycle, price tends to stay oversold much longer. And then, of course, you get the final bloodbath phase here where it gets deeply oversold. And then this was the clue that we're in the advancing phase of an intermediate cycle as price gets overbought and stays overbought. And this is the point at which you see a lot of analysts that don't really understand what's happening. They want to fight these overbought conditions, expecting the overbought to turn the market back down like it did during this declining phase. But the environment has changed. We're now in the advancing phase of an intermediate cycle. And so this is normal. Price will stay overbought for long periods of time during the advancing phase of an intermediate cycle. And we're still very early in this intermediate cycle, only 8 weeks. And an intermediate cycle can, most right translated cycles, and this one should be right translated, will rally for anywhere from 12 to 20 weeks before the intermediate cycle tops. And considering just how extreme sentiment got at this bottom, in many cases more extreme than it was at the 2009 bear market bottom, we have a lot of fuel to drive this intermediate rally, even though, like I said, we're in the timing band now for some kind of corrective move. But you need to be prepared when this RSI, whenever it gets down in here to oversold, that's your signal to start buying, because this intermediate cycle is not done, and we're not rolling over and starting a bear market. We're still in a long-term bull market that has 10 or 15 years to go.